The world just shifted beneath our feet. While most crypto investors were sleeping, XRP quietly positioned itself at the center of a financial revolution that's about to explode. What happened at Davos this week will change everything you thought you knew about digital assets, and if you're not paying attention right now, you're going to miss the opportunity of a lifetime. I'm about to reveal why institutional money is flooding into XRP, while Bitcoin and Ethereum are hemorrhaging billions. And trust me, by the end of this video, you'll understand exactly why 2026 might be the year that separates XRP believers from everyone else. Before we dive into the bombshell news, smash the like button, drop your thoughts in the comments, and subscribe for daily XRP content that cuts through the noise and gets straight to what matters for your portfolio. Or here, quotes what nobody's talking about. While the entire crypto market bled red over the past week, with Bitcoin dropping below $88,000 and Ethereum sinking to $2,900, XRP demonstrated something remarkable. It's currently trading at $1.90, and despite the broader market carnage, institutional investors are doing something they've never done before with any altcoin. They're buying the dip with unprecedented aggression. Let me paint you a picture of what just happened. XRP exchange-traded funds just experienced their first weekly outflow since launching in November 2025. You might think that's bearish, you'd be dead wrong. Here's why this is actually the most bullish signal we've seen all year. That outflow totaled approximately $41 million after XRP had surged 25% in early January. This wasn't panic selling. This was calculated profit taking after a massive run from $1.84 to $2.40. Smart money took profits, and you know what happened next? Within 24 hours, institutional inflows resumed. Compare that to Bitcoin and Ethereum. Bitcoin ETFs lost $681 million in the same week. Ethereum products shed $68.6 million. XRP's $41 million outflow looks like a rounding error. Even more telling, XRP ETFs have now accumulated over $1.37 billion in just 50 days since launch, making it the second fastest crypto ETF to cross the billion-dollar threshold after Bitcoin. Think about that. 50 days, not 50 months. 50 days. But here's where it gets absolutely insane. Brad Garlinghouse just dropped a prediction at Davos that sent shockwaves through the financial world. Speaking at the World Economic Forum, the Ripple CEO went on record stating that crypto markets will hit new all-time highs in 2026. Not maybe, not possibly, will. When the CEO of one of the most established crypto companies makes a prediction this bold on the world's biggest stage, you need to pay attention. Garlinghouse didn't just throw out random speculation. He pointed to concrete regulatory changes, specifically the landmark Genius Act, that just unlocked massive institutional activity in the United States. This is regulatory clarity that the crypto industry has been begging for since 2017, and it's finally here. The floodgates are opening, and XRP is positioned right at the center of the tsunami that's coming. Now let's talk about something that should make every XRP holder smile. While Garlinghouse was speaking at Davos, Ripple wasn't just participating in the conference, they were sponsoring the USA House, aligning themselves with top United States financial institutions. The company showcased institutional-grade XRP ledger infrastructure and revealed zero-knowledge-enabled payment architecture through DNA protocol. This is anti-surveillance identity infrastructure that fits perfectly within compliance-driven banking frameworks. Translation: banks can now use XRP for cross-border payments while maintaining privacy and regulatory compliance. Game over for Swift. And in speaking of Japan, here's a detail that flew under the radar but could be absolutely massive. SBI Holdings chairman Yoshitaka Kitao confirmed that Japanese banks will begin using XRP in live cross-border payment flows starting this year. Not pilot programs, not tests, live flows, real money, real adoption. At the same time, a representative from the Bank of Japan attended Davos, which observers view as a coordinated signal from Japanese banking leadership. When central banks start paying attention, you know something big is happening. Let me show you why the supply dynamics are about to get absolutely wild. XRP ETFs are currently holding over 807 million XRP tokens in custody. Exchange-held XRP dropped 45% over 2025, falling from 3.95 billion tokens to just 2.6 billion. That's institutional accumulation happening in real time. Every $1 billion in ETF inflows locks approximately 500 million XRP, which represents 0.76% of circulating supply. Here, quotes, the math that should blow your mind. If December's $483 million monthly inflows sustain through 2026, XRP ETFs could accumulate over $5.8 billion by year-end. At that pace, ETFs would remove approximately 2.9 billion XRP, or 4.4% of total supply. Combine that with the 45% drop in exchange balances, and you have a supply shock brewing that could make previous bull runs look like warm-up exercises. Smash the like button if you're starting to see why this matters. Comment your price predictions for XRP by the end of 2026, and subscribe because the next piece of information is going to change how you think about XRP's price ceiling. Standard Chartered analyst Jeffrey Kendrick just published what might be the most aggressive XRP price target from a major financial institution. He's projecting XRP could reach $8 by the end of 2026. That's a 247% increase from current levels. His methodology isn't based on hopium or technical analysis. It's based on cold hard supply and demand mathematics. If XRP ETFs maintain current pace and attract $10 billion in total inflows by late 2026, that capital would need to purchase approximately 4 to 5 billion tokens at average prices around $2.20. Now combine institutional buying pressure with something else that's happening right now. The entire crypto market is watching what Trump said at Davos. The United States president pledged to make America the crypto capital of the world and confirmed he plans to sign a major crypto market structure bill very soon. This isn't campaign rhetoric anymore. This is policy, and when the world's largest economy transitions from war on crypto to embracing the industry, the implications are staggering. Play. But here's what concerns me, and I want to be completely honest with you. Despite all this incredible institutional accumulation, despite Japanese banks preparing to use XRP for live payments, despite regulatory clarity finally arriving, XRP is still trading around $1.90. The disconnect between fundamentals and price action is massive. Retail sold while institutions bought, creating a gap that history shows rarely persists for long. Technical analysis shows XRP is currently consolidating between support around $1.88 and resistance near $1.93 to $1.95. Volume has been fading, which often happens right before a major move. The question isn't if we break out of this range. The question is when and in which direction. Here quotes my take, and this is not financial advice, just my analysis. The institutional accumulation pattern we're seeing is identical to what happened with Bitcoin before its massive rallies. Smart money accumulates quietly, while retail panic sells or loses interest. Then when sentiment shifts, price moves violently upward because there's no supply left on exchanges. We're seeing exchange balances at multi-year lows. We're seeing ETF inflows that dwarf Bitcoin and Ethereum on a relative basis. We're seeing real-world adoption from Japanese banks. We're seeing regulatory clarity in the United States. The setup is there. The fundamentals are there. The institutional positioning is there. What's missing is the catalyst that shifts retail sentiment. That catalyst could be the crypto market structure Bill Trump mentioned. It could be the first announcement of live XRP usage from a major Japanese bank. It could be Standard Chartered or another major institution officially adding XRP to their portfolio allocation models. When that catalyst hits, and it will hit, the price action is going to be explosive because there simply isn't enough supply available to meet the demand that's building. Let's talk about what separates 2026 from previous cycles. In past bull runs, XRP moved on speculation and hype. This time, it's different. We have regulated ETF products giving institutions compliant exposure. We have real banking partnerships going live. We have regulatory frameworks being codified into law. We have the world's largest economy embracing crypto instead of fighting it. This isn't speculation. This is legitimization. One more thing that's absolutely critical to understand. The XRP community has been through hell, years of SEC lawsuits, years of uncertainty, years of watching other cryptos pump while XRP traded sideways. But that pressure forged diamond hands. The people still holding XRP through all of that aren't weak hands that will sell at $2 or $3. They're believers who understand the utility case, who see the institutional adoption happening, who recognize that cross-border payments is a multi-trillion-dollar market that XRP is perfectly positioned to capture. Before we wrap up, let me give you the bull case and bear case so you can make your own decision. Bull case: ETF inflows continue, Japanese banks begin live usage, regulatory clarity accelerates institutional adoption, supply shock from exchange drawdowns creates parabolic price movement toward $4 to $8 by year end. Bear case: broader market conditions deteriorate, Federal Reserve maintains high rates longer than expected, institutional inflows slow, XRP continues consolidating between $1.50 and $2 for months. My personal view: the risk-reward ratio heavily favors the bull case. We're seeing institutional accumulation at levels that simply don't happen unless smart money knows something the market hasn't priced in yet. When major financial institutions spend months conducting due diligence and then commit billions of dollars, they're not doing it to make 5 or 10%. They're positioning for a much bigger move. Smash the like button one final time. Drop your honest thoughts in the comments about where you think XRP goes from here. And subscribe, because I'll be covering every major development as this story unfolds in real time. The next few months are going to separate those who understood what was happening from those who realized too late. Don't be the person who looks back at $1.90 XRP and wishes they'd paid attention. The information is right in front of you. The institutional accumulation is happening right now. The question is what you're going to do about it.